Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if a company is actually making money or just playing pretend. Today we are diving deep into First Business Financial Services Incorporated's latest report, and let me tell you there are some numbers here that might surprise you. First off, let's talk about the bottom line. In the last quarter of 2025, this company pulled in about $14.2 million after all their expenses and taxes. That might sound like a lot, but last year during the same time they made a bit less, about $10.3 million. So yeah, things are looking up for them in terms of making more money. Now, when we look at the whole 9 months of 2025, they raked in a total of $36.3 million. Compare that to the same period in 2024 when they made $29.2 million. It is a pretty solid jump. This tells us they are not only making more money this quarter, but they are also improving their overall performance for the year. The important thing here is that this is the money left over for regular shareholders after paying for preferred stock dividends. Let's look at the bigger picture though. Their total revenue, the very top line number before any costs, jumped by about $6.5 million in the last quarter compared to last year. For the entire 9 months, it was up a good $14.1 million. This bigger revenue is fueled by two main things: their interest income from loans and securities, and their non-interest income, which includes things like fees and other services. They are bringing in more money from almost every angle, which is a very positive sign for their business strategy. Now, digging into that interest income part, specifically net interest income, they saw a healthy increase. For the last quarter, it went up by $3.9 million, which is a 12.5% jump. For the 9 months, the increase was even more substantial at $10.9 million, or almost 12%. This growth is a direct result of them having more loans out there and also getting more fees from things like loan origination. It means their core banking business is expanding, but they are not just relying on interest. Their non-interest income, which is essentially all the other ways they make money, shot up too. In the last quarter, it was up by $2.6 million, that's over 36%. For the 9 months, it rose by $3.2 million, which is about 15%. This boost comes from a variety of sources, including fees from wealth management services, gains on selling SBA loans, and even income from their investments in SBIC funds. This shows they are diversifying their income streams, which often leads to more stable financial performance. As you might expect, when a company grows and makes more money, they often spend more on their people. Compensation expense for the last quarter went up by a significant $2.2 million, or almost 15%. For the 9 months, it was up by $3.2 million. This increase is mostly because they have more employees and they gave out their usual raises and promotions. It is usually a good sign that the company is investing in its workforce to support its growth. Now let's talk about the money they set aside for potential loan losses. This is the allowance for credit losses. As of the 30th of September, it was around $38.4 million. This is a slight increase from the end of last year. Even though they are growing and making more money, they are also being cautious about potential risks in their loan portfolio. This allowance is about 1.15% of their total loans, which is a pretty standard number for banks. What about the loans that are causing problems? Their total non-performing assets, meaning loans that are not generating income for the bank, decreased by about $4.9 million to $23.5 million. This is a good sign and represents less than 1% of their total assets. This shows that despite the growth and the challenging economic climate, they are managing their loan quality effectively. Looking at the company's overall size, total assets grew by $181.6 million to reach $4.035 billion. This is a healthy increase of about 6.3% since the end of last year. This growth is mostly in their loans and securities portfolios, which are the core assets for a bank. And what about the owner's stockholders' equity? Also saw a nice jump, increasing by $29.7 million to $358.3 million. This means the company is building more value for its owners through retained earnings. Now here is a number that gives us a good sense of how profitable their core banking is. Their net interest margin was 3.68% for the last quarter and the 9-month period in 2025. This is slightly up from last year. This means for every dollar of interest earning assets, they are getting more net interest income. It's a sign of good management in a fluctuating interest rate environment. And when we look at how efficiently they are using their assets to make money, their return. On average, assets was 1.40% for the last quarter and 1.23% for the 9 months. These numbers are better than last year. It implies they are using their assets more effectively to generate profits. In summary, First Business Financial Services Incorporated is showing solid growth in its core banking operations. They are increasing revenue both from interest and fees, managing their expenses well, and keeping their loan quality in check. While they are facing typical risks associated with the banking industry like interest rate fluctuations and potential loan defaults, their financial health appears strong. They are consistently growing their asset base and their profitability metrics are moving in the right direction. It seems like they are on a good path to serving their clients and delivering value to their shareholders. Now, looking at these results more broadly, First Business Financial Services Incorporated seems to be navigating the current economic landscape quite well. They are growing their loan book and deposit base, which are the lifeblood of any bank. Their strategy of focusing on business clients and offering a full suite of financial services appears to be paying off. The risks they've highlighted, like economic downturns and competition, are standard for the industry, but their strong capital and liquidity position should help them weather any storms. The increase in both revenues and profits, coupled with responsible expense management, paints a picture of a well-run institution. Alright, that is our breakdown of First Business Financial Services Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description to continue the conversation. Thanks for watching. See you next time.